And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Unbelievable. Feeling good?
Good, good. I'm glad. It's so good to see you. I know obviously tax season is behind you. Things are going great.
Yeah, you mentioning it makes me tired all over again. It's like that Pavlov's dogs there, right? They hear the ringing bell and then they just start drooling. I'm glad it's over. But you know what? I'm glad it's part of our firm. I mean, the taxes are, it's what makes us and what damn near breaks me. So
yes, it keeps you very busy, very busy.
Yes.
You're on the go. So I want to talk to you this morning actually about what is happening right now in the markets overall. Is there any risk out there at this time?
Yeah, there's tremendous amounts of risk. We're, a lot of people that have been, self-investors that have managed their own portfolios for years are now coming out of the woodwork saying, hey, I need help. And, where we may not have been a good fit for them, a year or 2 or 3 years ago, in their opinion, they now are seeking professional help. But yeah, the market is experiencing tons of volatility. I mean, listen, the Russia-Ukraine thing isn't helping at all. The Federal Reserve coming out saying that they're going to be raising interest rates even faster and more. So rather than doing 4 quarter-point hikes, we're looking at 5 75 basis points or 3/4 point hikes. So, that's really created some issues in the market. A lot of people have to realize that money's been very inexpensive to borrow here. And so companies have been able to, borrow money and expand, borrowing money at a very low cost. And now it's becoming, more expensive. Basically, the whole point of raising interest rates isn't just to penalize us. It's to make sure that we realize that the economy is growing so fast, right? You can't buy any cars. Inflation is through the roof. The supply chain is broken.
Absolutely.
Right? We have this complete dependence on China for supply chain issues. If we ever, think that, just flash back to what we saw during COVID where, remember that boat that they turned around full of our PPE from China, right? They're now, holding back on different semiconductors, which is why we have that 1 million square foot, building over there off the 303. Just north of our West Valley office. They're building one of the largest construction projects in America right now here in Arizona to make sure we can domesticate our production of these semiconductor chips.
Wow.
Yeah. We had a client that walked through the office that, watches my show and said, she owned 50 acres right next to that plant. And, it was worth, I don't know, $1 million or so. Now it's worth $50 million, literally because of this semiconductor chip. So wow. Phoenix is really, really growing. Despite, a lot of the other issues we're seeing nationwide.
Sure, that makes sense. So is there a lot of volatility right now? Yeah,
I mean, the volatility in the market is really what's shaking people up because we're seeing ups and downs, and a lot of the classical asset allocation models have still been hit pretty hard. So I think it's really important to make sure that you diversify your portfolios, not just in terms of investments, but also in terms of perspectives, to make sure that there's more than one point of view being reflected in your portfolio. Because, a lot of times when people sit in front of somebody, an advisor, they're sitting in front of an advisor that's the guy or gal that's picking the funds for them. And I tell people all the time, the worst advisor is the advisor that thinks they're smarter than they really are. And you know what? I had this real kind of awakening when I was in the office of BlackRock, biggest money manager in the world, and we have a special relationship with them. And I sat in their boardroom with people that just blew my mind. They're just absolutely brilliant. And, I met with the people from Cabana, some of our algorithm money managers, and David Young, who's honestly, I think one of the brightest people that walked the earth. He was with one of the biggest bond houses in the world for 14 years. He's now our chief investment officer at our registered investment advisor. He's a genius. And when you sit at a table with these people, you have to be secure with yourself as an advisor. to realize there are certain people on this world, that people that walk this planet that are better than me at certain things, right? You can't be everything to everybody.
Yeah,
And I'm telling you, when I sit in a room with these money managers, I'm just really glad they're on our team. And most people, have the guy down the hall or the person in front of you that's picking your funds for you. And that's a really tough thing, because what if they're wrong? Right? You're going to bet your entire life savings on one person's point of view?
Right.
That's crazy.
Yeah.
It's absolutely crazy. What if they get it wrong? You're gonna bet everything on that nice person across the desk from you that they're right?
Yeah.
The odds are you have more money than they do anyways. They may not let you know that that's true, but at the end of the day, you want to make sure that if one of them gets it wrong, that the whole thing doesn't fall with you. So not only do we believe in a diversification of investments, but also a diversification of perspectives, having multiple points of view, addressing different parts of your portfolio.
That makes perfect sense.
Yeah.
Has there been any raise in Social Security, Stewart?
Well, yeah. So what we've seen is the cost of living adjustment. We've seen the CPI showed at 5.8, 5.9%. That's nowhere near what real inflation's at. We're seeing numbers that are in that 9-10% range, because quite honestly, the CPI and Social Security looks technically at the CPIW, not the CPI, but which is a slightly different index. But we don't believe that it fully looks at things like fuel costs, the cost of used goods like cars, things like that. I just had a car, this amazing car. It was probably the one dumb purchase I made in my lifetime, but I bought it a year ago, and I got a call from the dealership that said, "Hey, we have a buyer for your car. If you bring it in today, we'll give you another car at retail." And what we'll do is we'll give you exactly what you paid for that car. A year later, so I have 25,000 miles on it, drove it for a year for free, and I was able to, they wanted $30,000 above retail for this other car, because we're above MSRP, but I said, yeah, I'm not going to do that. And he finally said, okay, we'll give it to you at retail so long as you bring in your car by the end of the day. And because they're selling these crazy used cars for as much as a new one.
Wow.
It's because the supply chain issue.
Absolutely.
Right?
I know we're going to take a commercial break, Stuart, but is there any way that you can put up guardrails to guard against what we're seeing right now with inflation?
Yeah, I think that one thing you want to do is just make sure you have a plan. I have some phenomenal clients that are moving in here from California, and they have, a couple $1 million sitting in their checking account, and we're looking at inflation. They're concerned about inflation, but let me just ask you this question. Does it make sense because you know that inflation's a real thing, you're losing 9 or 10% on your money if it's in the banks, does it make sense to invest that into a falling market? Maybe, maybe not. That's why sometimes it makes sense to have those in fixed assets. There's other sort of, non-investment options out there that are kind of insurance-based. They're not for everybody, but maybe those make sense for some of those options that you want to keep safe and not have the kind of market risk. I would just say don't be in a rush. Don't be in this big rush to get your money invested just to be invested. There's a saying, never try to, catch a falling knife. And I think that applies here. We're in a really crazy time.
Absolutely. Well, Stuart, I know you have a very special offer to present to the viewers at home today. Let's talk about what that is before we open the phones.
Yeah, absolutely. What we're offering the audience today is that complimentary portfolio review. If you just pick up your phone, put it on that QR code that's on the screen right there. Take a picture of that. And what that'll do is that'll take you to apsitaxes.com, our website. You click on the complimentary portfolio review, answer a few questions, and we'll get in touch with you. Or even easier, pick up the phone and dial 833-652-7829. I know it's the weekend, but we have operators standing by to take your call at this time. Feel free to give us a call. But here's the one thing I see is clients all the time say, look, we've been watching your show for a year, and we finally decided to call. And I said, well, what's taking so long? Why'd you wait? And they're like, I don't know. We just, just didn't do it. And what you need to do if you're really concerned about your portfolio is learn to get off that couch and take action. Take action today, and we'd be glad to meet you.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen, and that number is 833-652-7829. We know you have a lot of questions for Stewart about how to plan your perfect retirement. He has the answers for you. We're going to take a very short commercial break, but don't go anywhere. When we come back, we're going to talk a little bit about the difference between tax planning and tax preparation. Stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is president and founder of Asset Preservation Tax and Retirement Services. Stewart, a great show we're having today, obviously talking about such an important topic, planning properly for retirement, of course. In this segment, I'd love to ask you the difference between tax planning and tax preparation. Is there a difference, and how so?
Yeah, absolutely. So, whenever you say tax preparation, it just brings up, again, tax season again, and then I just instantly fall asleep. I mean, it's a, tax preparation. It's just simply preparing your taxes. So when you meet with your tax person, you drop off your paperwork, you're trying to claim all the deductions, and you're basically filing the paperwork for what's already been done. And there's very limited things that you can accomplish during that meeting. You may decide, for example, to contribute into an IRA or a Roth. I had a call this morning that was an amazing, from an amazing friend of mine. He's one of our basketball trainers that's becoming one of the top real estate agents here in Scottsdale. And he calls me and he says, he was getting his taxes done, and his CPA said, that he shouldn't do a Roth, he should do an IRA because of the tax deduction. And he was explaining, hey, you're gonna, you're at that 32% bracket, you're gonna be able to, take a 32% deduction there. And he's like, Stewart, well, you said don't do a Roth, you said do an IRA. And I was like, well, yeah, because understand what accountants are trying to do during tax season is, if you're at a 24% bracket, for example, and they tell you to put, $7,000 away, well, you're going to save darn near a couple grand in taxes, and they look like heroes by saving you that couple grand. But what they're not realizing is that, if you qualify for a Roth, for example, if your income's too high, you may be, phased out of it. But what you're doing is you're creating this massive tax time bomb for down the road, right? All of these guys that have done this great job of putting money away all this time, have built up this crazy tax time bomb. And, you know, I talk about this story, you know, every few shows or so, but, you know, last year I had a client that came in and he came in with this big IRA and I was super excited. I was like, man, you've done a great job. He was new to our firm. I said, man, you've done a great job, you know, with this, putting the money away. And he started crying. You know, he's 83 years old. He started crying. And I was like, well, sir, what's wrong? He's like, well, I have all this damn money, but my wife is dead and I have nobody to enjoy it with. And it was the worst thing, because what good does it do to put away all this money if you never get to enjoy it?
It's true.
Right?
That's true.
You know, what we look for at asset preservation when we do our tax planning is to help you just squeeze the nectar out of life, to be able to really enjoy every moment of it. What you don't want to do is be in a position where you're stuck with all these pre-taxed assets that have never been taxed, and then you're so worried about taking that trip to Europe or to Mexico or whatever your thing is. Right? I had some clients that just went to the Great Barrier Reef, had a time of their life. But guess what? We planned it. We planned it out tax-wise. My job is to make sure that if you want to have the best possible retirement that you can possibly have, to live the best life you can, to realize that you gave up so much to put this money away in retirement, and you really want to enjoy retirement, we want to basically provide a venue for you to be able to plan it all out, to have a real plan to go enjoy it. Because it doesn't do any good to have it if you don't have a plan.
That is so true.
And like I've said before, the worst time to plan for taxes is during tax season. These are people working these crazy long hours. God bless them. They're working their tails off 10, 15-hour days, 6, 7 days a week. But that's not the time to do tax planning. We are now entering the time that tax planning begins. You know, people have been able to rest for a few weeks here after tax season. They're, now getting their wits about them again. They're shaking it off after their vacations. They were able to, tax people, April 16th is like the biggest vacation day for CPAs. If you go to Cabo San Lucas, for example, half the people there are going to be CPAs or tax people, right? Because they just need to get away. But, tax planning is much different than tax preparation. Tax planning, there's tons of tools out there that we can use to help you plan.
Well, Stewart, I should also ask you this question. Obviously, we know that taxes are so important, but why aren't other advisors talking about taxes?
Well, honestly, most of them are prohibited from talking about it. If they work at one of the big box firms, even if they're some of the great firms, they usually have company policies that prohibit them from talking about taxes. Like when we talk about Roth conversions, right? We all the time will say, hey, you know what? A Roth makes sense in this situation, and people will take that back to their advisor, and their advisor is just like, yeah, you know what? Sounds like a good idea. This guy Stewart's onto something, but go talk to your CPA, and he'll tell you how to do it. Well, then the CPA says, go talk to your financial advisor. And so oftentimes the right hand doesn't know what the left hand's doing, which is why at asset preservation, not only do we know how to manage wealth, manage portfolios, yes, we do estate planning and living trusts for our clients, but we also have a tax office. The reason we have that one-stop shop is so that the right hand does know what the left hand's doing, that you never have to be caught in between your advisors, that we can do that all in-house and let you know whether or not you need help. And I'll just tell you this. If you think that you want to be in a place where you're walking into a culture of happy people that'll welcome you with open arms to their office, and you want to do it all in one shop, you don't want to have to go to 6 different advisors to do your financial plan, then pick up your phone now and click on that QR code. And what we're offering today is that complimentary portfolio review. All you have to do is take action. Like I said before, I know it's the weekend and you think that nobody's there to answer your phone call. But if you call 833-652-7829, we'll have someone friendly answer the phone for you. It's our answering service that's open 24 hours. They'll take your call now. Or even easier, if you don't want to talk to anybody, pick up your phone again, you click on that QR code and reach out to us. We'd be glad to help.
Stuart, thank you so much. To the viewers at home, the phone number to call is on your screen, and that number is 833-652-7829. We know you have a lot of questions for Stuart about how to plan your perfect stress-free retirement. He has the answers for you. We're going to take a very short commercial break, but don't go anywhere. If you're curious about how to build a tax-efficient estate, you're not going to want to miss this next segment. Please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Tax and Retirement Services. Stewart, before we went to the last segment, we talked in just great detail, if you will, about, of course, tax planning. But let's talk a little bit in this segment about planning for a tax-efficient estate. A lot of people have questions about how to do that. So what tools are available to do so?
Yeah, there's tons of tools out there. I think the one thing that's really important, when people set their complimentary portfolio review for us, we actually send them an email that tells them what they should bring if they're comfortable with it, right? And you can bring as much or as little as you want. The more you bring, the more we can help. One of the really important things to bring is last year's tax return. Because the first thing I do is I start looking at what we call the capital loss carry forwards. Now, what that is that, most people realize if you have a capital gain, you have to pay the entire tax on that capital gain the year it's realized. But if you have a capital loss, you can only offset long-term capital losses against current capital gains. Plus, you can only offset $3,000 a year of ordinary income against that capital loss. And so oftentimes people that, have these big capital losses from 2008 are carrying forward those losses. You haven't been able to use anything but $3,000, a year for the last several years. So I had a client that came in and, he came in and he said, Stuart, you're talking about all this tax stuff, but let's get one thing straight. If we're not talking about, dividend producing investments, then you and I aren't on the same page and this isn't going to work. And I said, well, sir, it's not going to work. And this is a guy that had this very successful company, had a big electrical company. He ended up losing tons of money in some other investment that I won't talk about it, but it was a pretty big deal that happened here in Phoenix. And he had, hundreds of thousands of dollars of carry forward capital loss. And I said, sir, the reason I'm telling you it's not going to work is because as a fiduciary, I know that dividends aren't the right play for you, and I'll tell you why. You have, whether it's a growth strategy or a dividend strategy, a gain is a gain. Growth is growth. And even though they come from different places, you're right, dividends and capital gains, to me, it's the same. It's a growth of your value. But if we take an approach that harvests long-term capital gains, what we'll do is we'll offset them against your losses, because this is a guy paying tons of taxes and dividends, right? He was paying these huge tax bills because he wanted dividends, yet he had hundreds of thousands of dollars of capital losses carrying forward for years. Well, if we just use a growth strategy and we harvest those capital gains against his capital losses, he can have the same amount of income and live tax-free. Right? You have to know what all your resources are. So number one, we need to look at your tax return. See if there's any losses in there we can harvest, what's available to you. Everybody's situation's different. And then we can go take a look. Hey, the way I look at taxes is, going from 10% bracket to 12% bracket is a small jump. I don't really consider that a big difference. Going from 12 to 22 is a huge jump. Going from 22 to 24 is a small jump, and then 24 to 32 is a big jump. So we try to avoid those big jumps in there when we do our tax planning. And some of the ways we do that is with Roth conversion. So if we decide, you know, people will watch our show and just convert their whole account to Roth and say, Stewart, you never told me this. Well, listen, I'm not giving you any specific advice. If you're not one of our clients or not one of our prospective clients, we are not, you know, the advice we're giving on the show is in generalities. It's not to your specific situation. Do not take the things I'm saying and try to do them yourself, because there are a lot of landmines out there tax-wise. That's why it takes a real tax professional. Listen, I complain all the time about tax season because it is a nightmare. It's not a big profit center for our company. We basically do it at our cost. It's not a profit center. But we do it so that we have access to CPAs and enrolled agents year-round to do our tax planning for us. So just remember, there's tons of landmines out there. For example, you know, if you are trying to, let's say you're in the 22% bracket, and you decide to convert $1 million IRA, well, you're now going to jump into astronomical, you know, tax brackets. But not just that, there's a lot of other things, like in between the 22 and 24% bracket, even though that's a really, really small jump from 22 to 24, if you're 63 years or older, there's something called IRMA. And what IRMA is a Medicare penalty. So if you cross that threshold, you can now start paying penalties on Medicare. So I think the really important thing is to know the impact of what you're doing, right? To not just blindly take advice or look at strategies and do it yourself, because oftentimes once you've done it, it can't be undone. So have a plan, deal with an advisor that really understands tax planning, know what tools are available, know what your options are. And if you want help, just understand it's really, really important to seek it. You know, people sometimes just are uncomfortable seeking advice.
Sure. Well, how important is it, Stewart, to have a second opinion with a fresh set of eyes, if you will?
Well, you know what? I really do like to quote Brian Quanta on this one. He's a phenomenal financial advisor out in the Pittsburgh area. So if you're from Pittsburgh and want to do business there, Brian Quanta is amazing. But the one thing he says, and I steal this quote all the time, he says, you can't get a second opinion from the guy who gave you the first, right? You need to get a fresh perspective. I talk about diversifying your perspective all the time when it comes to portfolios, but you also need a fresh set of eyes to take a look, just to give you a second opinion. Here's what we commit to you today. If we see your portfolios and your estate and everything's done right, we're gonna let you know it. As a fiduciary, we're not gonna do anything to harm you. We're gonna let you know exactly what's in your best interest. If what you have is good, if it ain't broke, don't fix it. But there may be some things broken in the background that you just don't see. And if you think that there may be, just feel comfortable reaching out. We're here to help. Pick up your phone, click on that QR code, and sign up for a complimentary portfolio review, or give us a call at 833-652-7829. We'd be glad to help.
Stewart, thank you so much for another amazing show this week. To the viewers at home, most specifically, we would like to thank you for spending time with us today. That number to call once again is 833-652-7829. We know you have a lot of questions for Stewart about how to plan your perfect stress-free retirement. He has the answers for you, or you can click on the QR code in the bottom of your screen. Again, be safe, be happy, be blessed, and we'll see you back 1 week from today. Take care.